And we're live. Hello and welcome to the 101st episode of Game Theory Gang. I'm Matty ALLin with ChrispyMan of Hexfire.io. Welcome.
Welcome, Maddie. How are you? Good to see you.
I'm doing great. We have a couple members of our gang that are tending to their loved ones today, and but we got a great show for you tonight. So hit the like and subscribe button. Share this out on X and Twitter.
Like and subscribe, share, retweet. Well, re-X. I don't know what the hell you call it, but yeah.
We got 0x Coast temporarily down. We got the origin address wallets seeking yield. Some would say picking up pennies in front of freight trains. Some would not say that. We've got ChrispyMan's favorite 19 hex per t-shirt payout that just happened this week. And
it was my favorite.
Even people criticizing those who make shows for people who are already in the community.
Woohoo! Gotta love that. Love the criticism. Bring it on. Really like it.
That's right. In fact, that's the first topic I wanted to hit tonight. Is the question of why? Why would people make a show that does not onboard new people?
Why? Are you referring to your show?
This would probably count as a show that is not catering to brand new onboards.
Well, I would say yes, it's not catering specifically to onboarding, sure. But that doesn't mean it's not part of the onboarding process, right? In my mind. But I guess you're gonna fill me in on the details because I don't know.
Well, yeah, I think there's a really strong why as to basically how the community has, shows that are focused inward and outward and everything in between. And really what I see is that there are really three target audiences in crypto. You've got the people who are maximalists who have been in already. You've got people who are in crypto but are not yet in the RH ecosystem. And then you've got people who are no coiners or pre-coiners, as you might call them. So those are three totally different groups that all need to be accounted for. They all need content targeted specifically at them. The people who are already in a coin, they decide half of the equation of what the price is worth because they are on they can hold or they can sell, right? Of course, people can buy more, all kinds of stuff like that. But basically, if you only cater to new onboards, then the people who are already in are going to get bored. They're going to go picking up pennies in front of freight trains. And so I think it's extremely valuable to have a show that caters towards whales and sharks and dolphins and turtles and squids and people who have been in for a while, because we're always learning new things about the emergent properties of Hex and Pulse Chain.
Wow. Wow. Well, Maddie, I would say this. I've been onboarded into a lot of organizations outside of crypto. And one of my pet peeves is I hate being onboarded into something where it's push, 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 come, get in here, let's talk, and then crickets. So I think that it's just fine to have, I think it's important to have different types of content and a variety of content that caters to a lot of different people. I bet you a lot of new people find their way here. And they may not even understand some of the stuff we talk about at first, just like we didn't understand we came in. But once they've been around for a little bit, they probably come to appreciate it. The other thing is every show isn't for everybody. I mean, it's open to everybody, if it's public, but it really isn't for everybody, right? There's a lot of stuff that people, even myself, right? There's people I respect that have shows and I turn them on and turn them off sometimes, right? Because I can't watch everything, that's out there that comes out. Like there's a good guy, a guy that I like, Hex Token. If you ever watch, we've talked about him on
he's
the show
great
before.
Yeah,
he's great, but the timing's all off, and I don't get a chance to see it. And it doesn't mean I have bad feelings about it, but he's got a great round of content that's out there. You know, yeah.
Everybody should follow Hex Token if nothing else, because I believe he's created the most videos regarding Hex and Pulse Chain out of any single content creator. He's
Yeah, and I don't want to misstate where he's out of. Do you remember which country he's out of? I want to say Australia. I don't know if it's New Zealand.
yeah, that part of the world for sure.
Yeah, yeah, me too. I don't know. I don't know offhand. But for all you Kiwis out there, I'm sorry. I'm not being insulting. I just don't know.
Well, yeah, they've got the title for the streamer who's done the most streams.
Ah, damn.
You know, another thing that I think really matters going into this 4-year cycle situation, you know, there are a lot of people in crypto that are going to want to take profit.
Let's put that over in the, let's put that in the parking lot. We'll come back to whether this is a 4-year cycle or not. Go ahead.
Perfect, perfect. So there's some sort of economic cycle playing out here. Don't know if it's a 4-year one or maybe we'll learn something new tonight. But basically, something that I've really valued in my YouTube consumption of crypto in the past 7 years is I like to see people over multiple cycles because it helps me figure out where the sentiment is at. And so, you know, there are a lot of people that I watch, and part of the reason I watch them is because they are good sentiment indicators. And because they're giving good information. But the moods, the emotions that the streamers you've been watching for years through a bull market and a bear market and now going into another bull market, that's really valuable. And so I think that's another thing that I appreciate about people who do shows, even if they're not onboarding new people, is that they're providing really valuable sentiment indicators.
Yeah. Sure.
Shout out to Crypto Stylist. What's up?
Crypto Stylist. Yeah. There's a lot to be coming out here. I mean, I still think Xander's talking about in the chat there about this not being, you know, game theory not being for new people. I think it still is. I think it still is. I gotta think of the term that I just heard RG use. Oh man, he was talking. It was talking with Axis today about there being a staker imbalance. I forget the term he used, and I got to go back and look it up. I should have wrote it down. But just that, you know, we don't have as many people staking, and in the hex system. Yeah, I know the guys are negative are going to be, oh, that's because it's, you know, staking's, you know, for whatever's right. And it's terrible move and all that kind of stuff. But it truly is the hex way. And the only way to really hear about is hear people talk about things like staking, you know, creating a mining ladder over time. And it just reminds me of that. As you're talking about this,
it's great that we have something here that lots of different types of people can get behind. You can create content for new people. That's something that Fashion Coder does. She even teaches in-person community college courses about how to onboard to crypto. So there are people who are creating content specifically for people who are brand new, no coiners, pre-coiners, you might call them. And then there are people who are catering towards people who are already in crypto. You've got Mike, the investor. He's doing that. He's converting people who love Solana, getting them into Pulse Chain. And then you have people like us that are, you know, kind of catering to all types of groups, but probably the most is people who have already been into the things that we like and are wanting to learn, do very deep dives, whale deep dives, that type of information. So
yeah, I'm probably tangent off of that or perpendicular to that. You know, and your comment about people and watching them over the different years. I agree with you on that. I mean, I've been watching a lot of people from 17, but it's amazing to see that 60%, 50, 60% of them are gone, right? You know, a lot of them just disappear. And boy, they had conviction at the time about whatever it is they were doing, you know, and they're off on their own. For my content that I put out, you know, I do get a lot of comments and whatnot back about what I do. and sometimes even on the show, right? But here's the thing: I don't really think about it as being new people or experienced people versus each other. It's more about people interested in the topic, that topic itself. So a lot of what I do is very redundant, but it also tends to be more detailed. And more
Yes.
and more technical,
Detailed.
right? So it's kind of like
Yes.
it's listen, you can come into Hex Crypto and push the right, take the IQ test, right, and push the button, I believe, right,
Yes.
and just start participating. You don't need to know all the details unless you want to know the details, right? Once you get to your
Correct.
certain level of support, I mean, the rest of it you can just go on with the rest of your life, and not particularly if you're building a mining ladder and getting into crypto through that methodology with X, right? Um,
I think another kind of related point that I wanted to hit on is that I love the man with many hats. He's
you
all
like
of our
my hat?
friends.
You like my
I
hat?
do like your hat.
Yeah.
I
But,
complimented
oh,
you
you're not
before the
you're
show.
not referring to me. Okay, I
The
get it
the
now.
man with many hats. He Sami. He's really been hitting this point hard about round tripping Hex, and I would like to counter that point because
Well, wait a minute. Is this some sort of adult thing? What is round tripping?
so to round trip a bag means you hold liquid through a bull and a bear. And that's part of this is part of the sentiment that is stopping people from staking is because they want to time the market.
Hmm. Oh,
And
I heard timing the market is how you do things. That's how it works.
well,
I
it's
mean,
good in
everybody I listen
theory.
to. I mean, I saw this guy CTO Larson. You know CTO Larson? CTO Larson?
Sounds like a scammer, but
No, he's not a
go on.
scammer. He's got his own indicator and stuff. But he's really good in the Bitcoin here. But you know what he talks about? Timing the market.
Oh,
Right?
brilliant.
You know what? So a lot of people I know that I really respect and like, they talk about time in the market, right? I mean, even DIY or DIY, a DIY, do it yourself investing, right? Donovan, that that's the plan. When I came from Bitcoin, what was the plan? Time the market, right? So really, it's like entry level discussion, right? Trying to time the market. Everybody wants to time the market, but I'm not sure how many get the market top. How many time the market and get the top and get the bottom. It's kind of tough if you think about it, right? I mean, to fully execute that, you have to be pretty self aware and be able to delay gratification on your own for sure, right? Because man, if I timed the market this last time, and in September of 21. Would I have been able to hold out until August of 23? I don't know
Well,
what I would do.
the point I'm trying to make is that go ahead and time the market all you want, but if you're not earning trustless yield along the way, then you're paying the cost of inflation in the hex system. And to compare hex and this idea of round tripping hex, to compare that to round tripping Ethereum, well, Ethereum or Bitcoin or anything else, it doesn't pay trustless yield, and
Well,
it doesn't have the complex mechanism of the t-shirt. So Jeff Booth a lot of times talks about you can't measure the new system from the existing system. He's talking about Bitcoin, but this can apply to Hex even better. You can't compare holding liquid in a coin that doesn't pay trustless yield versus this new system of Hex that does. And that's really, I think, a big thing that's getting missed with this whole round tripping discussion, uh, beyond just the market psychology of fear and greed.
mm, mm. Well, yeah, I'm glad you brought up the market psychology again. So I think that if we mathematically sit down and have a discussion about it, you're wrong, right? That's what I think. If
Ooh,
mathematically,
bring it,
mathematically, you're wrong, right? Because I
bring
know
it.
damn well that if I sold Hex at what? you call the top whatever you want, 48 cents, 50 cents, whatever. If I had sold Hex at 50 cents, I could have bought a shat ton more later, right, when it got to the bottom.
If you could
But
have, you would have.
well, no, because I don't follow that ethic, right, or whatever ethos. I don't follow that process. I do mining, right? It was 99% mined. I was mining with almost 100% of my Hex, and I still am. I do have some in the farms, but besides that, that's what I'm doing. But here's the thing. It's like a conversation about other people's money, right? The concept of other people's money. So yeah, look, all you people out there listening, audience, a lot of you are going to think that I'm wrong. It's okay. There's room in the world for different things. Um, you trade off risk by doing certain activities, and for me, mining eliminates a certain amount of risk. Still have risk. It's crypto, but it eliminates a certain amount of risk of what that whole process looks like to avoid what you call round tripping, right? And what are those risks that I'm talking about? For me, the risks are I have to pay more attention and I might miss something. I have to time the market. I have to feel like it's okay. I have to be able to pick it. Even when I made that little joke about the top last time, hey, we got to the top and everybody I knew was like, this time is different. Mostly everybody, except for Richard. He wasn't saying this time was different, but everybody else I knew that was close in groups, they were like, this time is different. And so we all sat there holding our Hex anyways, right? And so when my
Holding
stakes came,
1% liquid or holding 100% liquid at the top?
well, in the case I had stakes come out, right? So I had to make decisions in October, November, December, January of 2022. I had to decide what to do, right?
Okay.
And
So
so there's emotions and potentially like fear, greed, FOMO, all sorts of stuff going on. Anyways,
yes,
well,
but you
I'll
did
just
not round trip.
no, because everything was there. But no, I'm happy for that because, of course, I'm getting pretty good APR, and so my bags just got fat, 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 fat. They're fatter than they were before. And now if I look from cycle bottom to cycle bottom, I have a higher price and I have more tokens. And so I feel like a winner. Give me a helmet. I don't
The
know.
this is not completely obvious, but in my opinion, the best ROI comes from not being able to sell until it's time, until your stake comes out.
Until it's
So
time.
so people in this market now, they've many people who hold Hex now have never experienced a 1000x. People holding liquid. People who've been holding liquid for 2 years. People who've been holding liquid for a year and a half, a year. These are people who are new to the system who have never experienced a 1000x. And so they have no idea what's coming for them when they get a 10x. Maybe they have a little bit of an idea because they saw what happened when we got a 6x.
Yeah, maybe.
In between the end of 22 and the middle of 23. You got a 6x in Hex. So it's going to be really fascinating to see how the time locking narrative goes back and forth. But this idea that Hex is the same price it was 3 years ago and the gains are weak compared to everything else because you round tripped it. The people who held liquid for 3 years obviously did not understand the system or were horrible at market timing that they didn't even get the
well, and that's the risk that I mean.
the macro cycle.
Yeah. Have you ever heard the concept of using other people's money? You ever hear that concept? It's taught in
Break
school
it down
quite a
for
bit.
people in the audience.
It's so outside of crypto, right? I mean, the idea in markets and in real estate, and you hear it from some of the real estate people we have here too, works great in this way. The idea that I can go buy, like for instance, a piece of property, right? Buy a piece of property, I fix it up, I rent it, right? Now I go back to the bank, I borrow all the money back against it, I go buy another piece of property, and then I do that over and over again. In fact, I have family members who have done this very successfully, and they're doing fine, right? But there's a certain amount of risk that you take on, right? And when you are trying to squeeze as much out of the system as possible, and it means that you need to execute pretty flawlessly, you know, for things to happen.
Yes.
Otherwise, and this is the risk I'm talking about buying out. It's like a very similar conversations with debt and mortgages and that type of stuff too. But Mick Slammin here had a great point, which you put up on the screen, which is, yeah, well, here's the risk. The risk is that can could I have out traded during this period of time and have gotten a 3x on my hex, the number of my hex coins. And I'm not sure that I could have done that. Right. Now, I know people that are doing it. I see people do stuff, but not everybody's doing it. I have plenty of horror stories that I hear from people. So, and what I'm kind of referring to, during this period of time, 65% APY for some people during that period of time, cut it down and say it's just a 2x. But could I have 2x'd my hex by trading? I'm not sure I could have done it from the top till now. Right. Would have required me to get out, opens up a whole, take my hex out, right?
Pay
Hold,
taxes.
hold, yeah, pay my taxes, hold my value, and then deploy again, you know. And what I've been fudded out, so I would have been experiencing FOMO and FUD, and I get that this is for those people who want that experience. This is a losing argument, but this is what I do. That's not what I do, right? I'm more about, hey, I want to have a mining ladder. I'm pre-planning how much hex I'm going to come out is going to come out. Yes, I recognize there's risk long term in crypto, so I don't know what's going to happen long term, but the trend has been, higher highs and higher lows, over time. And so in that framework, with creating a ladder, you get what you need.
You really do. And yeah, like I said, it's not going to be obvious to people until they experience at least a 10x gain. It's not going to be completely obvious until we're in the type of bull cycle that shakes out the traders. And you need traders. There's nothing wrong with trading. It's just trading
No,
is not a
we need 'em.
long-term strategy.
Yeah, yeah.
There are
Yeah.
statistics that show 90% of traders lose in the long term, and that's because the market is very efficient at
Yeah.
faking you out. Right now is a perfect example. I don't know whether Ethereum and Pulse Hex and Hex are going to go straight up or straight down. I have no idea.
No, no. Well, listen, I can tell you from personal experience, I spent 5 years, let's see, how long was it? Yeah, 4 years. I spent 4 years accumulating BTC, right? And just stacking it up
Props.
and stacking sats, right?
Hell yeah.
And so you know how much I sold it for? You know how high Bitcoin went for? You know how high Bitcoin went for?
It went up to 69K
68,
and
68.
20K.
What do you think? What do you think my average sell price was?
45.
Nah, terrible. I was like 30.
30.
So you know what's terrible about that is you would think I would know better, right? Now maybe I didn't have as much skills, right? But what happened? Well, it got up. I did the right thing the first round, got up to this highs, the first high. I was like, yeah, I got to take this out. I took some. And
Did you sell on the front end or the back end of the bull market? It was
front end,
30.
front end and back end. See how smart I was?
Okay.
So now, in theory, right, if I hadn't sold some of it all the way down to 20 anyways, but then when I sold some at 20 and it was down to 16, I didn't want to buy anymore. I mean, these are some of the
Yeah.
weird things that happened in my head at the time. Now, guys, I'm not talking about over the top value, right? I'm talking about you know, we're talking about 10, five or $6,000 worth at a time. But my point is this is I thought I was pretty smart and I was going to time it, and my plans went to crap. But you know what didn't go to crap is
Your staking ladder.
everything went in my ladder. So and yeah, and I would say that probably at up to now, all of the stuff that I put into the sacrifice hasn't gone to crap. So
That's what's up.
it's crazy. I mean and listen, I'm very good friends with Axis, and he's got an uncanny ability to work with work with charts and graphs and predict what goes on. And that's great. But I I go to him to ask for help when I need help because I'm not sure exactly what the hell might be going on in the market because I look at the numbers and I get very emotional, you know. Anyways,
Yeah.
I'm just trying to relate that I get it. I get why there would be trouble, you know.
So there's a lot of banter on Twitter right now about the origin address, so-called sacrifice address, whatever you want to call it. The OA is not just a show on TV. It's stands for the origin address of Hex, which is also referred to as the sacrifice address for Pulse Chain and Pulse X. But it's one of the largest holders of DAI in the world, which is a stable coin. And this is somebody who's proven on chain that they have $600 million.
$600 million.
And they know how to use it, and they like Pulse Chain and Pulse X and Hex, and even incentive token.
Even, oh man, incentive token's the thing, man. It's the juice.
Well, I got cheated out of incentive token recently. I'm gonna be like the guy who was crying, "Why did I sell my Hex?" But I didn't sell my Hex. I sold my ink.
You sold your ink.
And I'm getting shaken out as we speak.
Yeah, yeah. Well, I say that tongue in cheek because I have having experienced that downward motion on the ink over the farming, because you guys know I told you that I've been farming from day one. I talked about it, right? So I mean, I've been validating and farming. I've tried my hand at LP, and I have my hex miners. I frankly prefer the hex mining over everything else, because
Pays
it's
better,
just
right?
um, that could be argued in the near term that it does not, because the APYs on some of the farming pools are higher. 100% is kind of hard to beat, but there's the impermanent loss is terrific when you're going like pulse against DAI or something like that. And then, but you could say that the ink farming itself competes with new miners right at the moment, but they don't have longevity. That's another risk thing with the farming is that yeah, sure, the farms have been in place for the last 6 months. They look the same every day. The numbers go up and down. I like them, but tomorrow a decision could be made to change the rates, and everything gets halved, or one could go away. And not probably
Or
not
the
ink,
OA
right?
could start mining and make ink super rare. I mean,
Or they could, yeah, they could
either
add
way.
another one. They could add another one. I mean, there's like 10,000 things that could happen. I don't know. What
Yeah.
doesn't happen though with Hex is, and this is something I talk about ad nauseum, week over week, and I see sometimes you tune in, Maddie. The origin address and the tokenomics of Hex created a mechanism where it's very difficult to change the direction of the ship. It's always at a very slow pace. And so you don't, yeah, even this giant payout we got a couple days ago was wonderful. I loved it. I like getting 18, 19 hex per T-share on each chain. That was wonderful. Thank you to the guy or lady who did the emergency end stakes on that. But did share rate go up because of that? Not yet. It'll go up a little bit. Did payouts go up the next day? No, they're right back down, right? They're up a little bit, right? Why? Because the T-shares were burned. So it's not like somebody does something big like that and all of a sudden we're instead of going left, we're going right. It just turns a little bit. The ship turns, right? And same thing with, because I've answered this question a ton of times. You got the 2 billion hex on both chains. There's actually a little bit more on Pulse chain. That
Who
was staked for
has?
45 days, and
Oh, Godwell.
some people say it's Godwell. Um, I've gotten the question half a dozen times, maybe a dozen times. How high is the share rate going to go? It's not going anywhere. Not
Yeah.
going anywhere because of that miner. I mean, it may adjust the system over time a little bit, but when they end, their share rate's going to be lower than the share rates of the other miners coming out in the same days. So it won't affect it at all. Anyways, my point is I'm doing the farming, so I can tell you about it, and I'm doing the hex mining. I know what's happening next month with hex mining, right? I have no idea what's happening with the farms. I just go with the market,
You have
whatever
a
the
chart
market
of
does.
future market supply. Is that what you're
Chart of
saying?
chart of future market supply. I have a chart of future reward rates. Um, I know that I can count on the system to continue to operate the way it operates. It's immutable. Nobody's changing it. There's no surprises. The only thing I can't really anticipate is what's going to happen with the swap price, right?
True that.
So,
Well, yeah. So I mean, ink. Yeah, it's a mystery to me, but I see it having super high liquidity with everything else. So I think it'll go the way of everything else, which, medium term, I predict
well,
Pulse and Pulse X to do really well.
what do you think that? Let me ask you a question, right? What do you think the two pairs are that are thickest with ink? The
Um,
most LP. You
I
said them. You know.
I think it's Pulse and Pulse X.
Pulse X. I'd be surprised if it's not those two, since they're in the farm, right? And that's the only way that you can make more ink with ink, right? So they're in the farm, and that's the main generator. And what do we know about Hart's law? When things are tied together like that, they're going to go up. They're going to go down. And when Richard came out and had said something about this kind of confirmation of all this, is that, hey, this is leverage, almost like leverage against Pulse and Pulse X when you're in ink. What went down further and harder, ink or Pulse? Ink. What potentially could go up harder? Ink.
Mm,
What what will
ink.
potentially come down harder?
Yes, ink can move harder, but uh, it's hard to compare like it coming down because it's is a completely different supply dynamic. Um,
I
People
don't think so. But
overpaying at the very beginning was like part of the reason why ink like supposedly came down so much, but you have to like
well,
give it a
I
baseline. And
suppose I could give you that one, yeah, because the $80 was a gift of sorts, and how that had
yes,
come about. Um, so possibly in the distribution base. So looking forward, though, I would expect to see that kind of an overperform, underperform kind of a metric, though,
in the
because
short term, but in the long
they're
term,
tied.
it's kind of the market versus the inflation of the token. And I could really see a scenario where it lags or super outperforms and then hyper performs or performs from a lagged position because you've got the supply doubling every time the length that ink has existed doubles. And uh, there's still a positive narrative, though, that the OA doesn't have any. So, I mean, if you like a meme coin and you like the utility of bridging in value and creating liquidity, I mean, you have a strong argument for ink.
Mhm,
I just,
mhm,
I think it's going to perform along with the market. And like, so you've got that factor. And then you have to layer on top of that, kind of like how much of a bubble is going to form in ink before the supply dynamics play out. And I wasn't playing ink as it was dropping because it was so new. Because in the first 3 months of ink, then you waited 3 more months and you've doubled the supply. But once you started to hit, that 5, 6, 7, 8 month period of ink existing, now you're starting to see, if the bull market continues and in the next 6 months, the value of the entire ecosystem doubles or goes up 10x, then Inc can do super well, I think. But if you get a delayed reaction in the market, then it could underperform in the short term. But it'll be interesting to see.
Well, I think I believe it will overperform greatly, and
Interesting.
but I think it will be a boom and bust scenario in that it will overperform, and when the market thinks it's the right time, it will come back down greatly, particularly in the next bear or low cycle. But we don't need to worry about that now. But the reason what's going to happen with exactly what we're talking about a few minutes ago is the idea of the folks, right? Like my idea with farming is I set the farms, I plan to leave them. That might not be the right choice, but that's what my plan is.
Till when?
I mean, definitely. Like for most of the stuff, the stables farms I set up were meant to be levers for later to fill my buckets, if I wanted to cash out if necessary. But not everybody thinks the way that I think. So of course, right? I mean, that's an understatement. So a lot of people will say, "Hey, listen, they call the top, and we get an overperformance on ink." Their thought would be to sell the ink at the highest price possible, hold the value until we hit a bottom, and buy all the ink that's on the market, right? So yeah, different game plays going on for sure.
Yep. Interesting. Now, why is the OA seeking yield on Ethereum?
I don't know. Why is the OA seeking yield on Ethereum? I did see a couple tests. I think it was the same address, right? So I did see that he went into Compound, or he went into
Duck.
Compound, right? The duck, and so there was some C dye minted over there. I didn't follow up on the rest of it, so I hope you have more to the story to explain what's happening.
Well, it was like 700K at first, and then it was $40 million. These are protocols on Ethereum where you can earn 5 to 7 or 8% APY, comfortably below what Hex pays, which is 10, 11% a year, I believe, on the low end of a 6-month to year-long stake. So,
well, it would obviously be to grow the value of the assets.
it could be, it could be to beat inflation. It could be to pay expenses. It could be to just grow the value. It could be to attract attention from those protocols themselves. It could be a vampire attack. I haven't heard anybody say that, but if people start following those wallets, they could find their way to Pulse Chain. But I have never really thought or expected that the OA would need to buy in order for our ecosystem to do well. It's like, perfectly okay for that to happen. But I think that we have an extreme amount of strength with or without that expectation. And certainly it's playing by the rules to not expect anything in return. Then you get the real market, the free market, to decide what the value of everything is, instead of, I guess the free market also prices in the possibility of buying by this largest DAI holder in the world. But so far, what have we seen? It's hard to keep track of, but my best guess is that the OA has bought maybe $6 to $12 million worth. And somebody could please fact check that and let us know. 160 people watching now, thousands on the replay. Not exactly sure how much the OA has bought of a Pulse Chain, P-Hex, Inc., PulseX, but it was that would be my estimate off the top of my head. So, but that's a fraction of what what it's got. Total but I am not counting on that money coming over and buying my bags. It seems like that wallet, people are always looking to that wallet for signals. And that could be because some people associate it with Richard Hart, and he's been really good at calling tops and bottoms over Bitcoin's, most recent 10-year history. So it'll be really interesting to see how the short-term macro plays out. I'm seeing some people calling for a correction in Bitcoin and Ethereum, as you would normally see in this type of a regime where the Fed is expected to start cutting rates. They haven't done so yet. And Bitcoin has gone on a crazy run that normally it doesn't do until after the halving, which is coming up in 50 days. I saw one person comment today that it seemed like some interesting alpha, that the ETF money can't rotate into alts. However, this was said by a maxi, and of course, a Bitcoin maxi would just like they would take that line and sinker. They would believe it. But in reality, if you make all the people who hold real Bitcoin richer, then they have more money to rotate into alts. So I think it's kind of a false narrative. But we've got people scratching their heads saying, "Oh, is there going to be some like broad market dump because the OA is starting to earn a little bit of yield?" I think it doesn't really tip me one way or the other. If Richard wanted to tell people, that to be bearish short term, he would probably just say it on Twitter.
Mm-hmm. Yeah, I don't know. It's unless you have information that's kind of solid, it's hard to speculate. Though I do that all the time, right? I think tank this stuff out.
It's fun,
to kind of figure out what's going on. I will say this: the last time I follow the golden ratio methodology, and that is related to Fibonacci, and I've talked about it many times here on this show. We have passed key support levels on now for both Ethereum and Bitcoin. And those key levels were first the 111-day moving average, and then the 350-day moving average, of course, as well as the 1.6 of the 350-day. The last time we passed that 1.6, which is 1.6 times the 350-day moving average for Bitcoin, it hit a top in about 150 days, 155 days, a blow off top. So
it hit a blow off top 150 days after reaching that Fibonacci level, or
yeah. And so it's, and Toby spoke about this the other day, and a lot of people are doing a lot of the same TA stuff. We're all just watching to see what actually happens, and will this time be different in different ways, right? And I guess that's really the point, is we just don't know what's gonna happen, because it looks like it's got momentum behind it, and so it'll just play out, and we'll have to watch it. And if we get to a blow off top, we'll see a blow off top, and then perhaps it's a two top cycle or something. I don't know. Again, we just have to watch it and see. The thing is, we'll only know after the fact, of course, that there was a double top, right? So we're just going to have to watch as we go. But I would think we're going to have our answer, before the end of May. At least for the first part, right? Because this coincides with what we've been talking about, all-time highs, right? Happening. I forget what's the date for the halvening. Maddie, do you remember?
It's
April
around the solar eclipse in April.
Yeah. So we'll know. Of course we'll know. So I just think people need to be prepared with whatever actions that they think might happen, because if this time isn't different, we go to some sort of a high. Yes, it'll be a higher high than normal. We see some sort of a pullback. We see a regrouping by the end of the year. We go to all-time highs and 25 at some point, and then we're done for 4 years, right? We come back. Well, we're done with this cycle, and we come back later. But we don't know when all these things are going to happen time-wise, right? Or if they'll even happen, and it might be different. So we'll have to watch.
I mean, Bitcoin ripping 9% yesterday alone was pretty legendary.
Yeah, I live for those 9% pumps, man. That's a it was a lot of money. It's a lot of dollars, isn't it? But we can roll over and on Pulse Chain and one of the tokens goes up 100%. So yeah,
Correct.
hard to move. Hard to
Yeah.
move that Bitcoin. Hard to move.
We don't get out of bed for 9%, but boomers who are in Bitcoin ETFs do.
Yeah, well, when you say 9% to me, I'm like, Maddie, do you even crypto, bro?
I know, right?
Like
Well,
9%.
it's Bitcoin, not crypto. That's the meme.
Hey, listen, that Michael Saylor, as crazy as he appears to be, when people make fun of him, he's a legend. He's legend. Right?
I saw him at Bitcoin Miami 2023, and he was getting mobbed by dudes.
Oh yeah,
he couldn't move. He got stuck. He got stuck.
They were probably simping hard. Yeah,
they were. It was very non-consensual. People taking selfies with him stuck in the middle of a bunch of dudes. It was pretty funny.
Reminds me of a movie. I forget the title. Hey, to that end though. So I say a little tongue in cheek, but you got to think of it this way. If you just if you could just for a moment space out and say, okay, I'm not in crypto. Let's go this way. I don't know anything about crypto, right? And you're out in TradFi. This dude
traditional finance.
Yeah, traditional finance. He put everything on the line to push this idea and this concept, and he's winning, right? And what was that concept? Get people to invest in his company either through stock or other mechanisms, so that he would buy more Bitcoin with the idea that Bitcoin is going to go up. But we're all familiar with this stuff. But here's the thing: is out there, dude. If you can produce, a average of 20% a year, you're like on the top of the world, man. Top of the world. And so, because I typically can't get that. There's been rare things where I've invested and have been able to get that kind of return year over year, you know. And so, yeah, I bet you, while we might think funny things about them in TradFi, yeah, those guys are running around with little pads and paper, and they want to take pictures and want them to sign the back of their phone or whatever the hell it is they got, because he's a hero on that end. But I get it that it's still very low gains. Like, oh my God. But it's the same thing when we talk about people coming into the Hex ecosystem, Pulse Chain ecosystem from traditional finance. Hex pays roughly about 8% APY right now for very limited mining. I mean, that is very attractive to be able to do that. So as other things,
8%? I can get 5 in treasuries.
Yeah, but that's not. I don't know what token that is you're talking about, but
treasuries, US dollar.
Oh, you don't mean the token treasuries? Yeah, is it only 5% now?
Yeah. The federal government is paying 5%, and you can hold USDC in your Coinbase wallet and get I think it's 5.15%.
Yeah, it might be that low. I saw along the line,
which is the highest it's been. Yeah, it's 5.1%, which is the highest it's been in many years. It used to be holding the dollar paid you, like when Hex was launched, holding the dollar was paying you 0.25%.
Yeah, well, locking Hex up for just 30 days is equivalent about 8% right now, I believe. So it's still higher than that. And, of course, the longer pays better because you get a higher amount. So ladders are typically coming in somewhere around 15%, 12 to 15%. Depends how you how you set it up. Hey, interesting point though. I got free USD yesterday. USDC. I got free USDC.
Go on.
Okay. So, I use Robinhood. Yeah, I know. Robinhood bad. Got it. All sexes are bad. Right? All centralized. I got that. But sometimes I got to do different things. And what I've been using that Robinhood, talked about this on the show a bunch of times for DCA. Up pretty good on ETH, by the way. And because
Well
it's
done.
easy mech. Yeah, I'm pretty brilliant. I'm like a Guinness. Uh, so I so I went in there and they said, "Oh, hey, guess what? If you take this little course, we'll give you one free USDC." So I did the
Mm.
5-minute course. It's like you remember the old Coinbase learn crypto thing
They still do it.
program.
Yeah.
Do they still do? I don't go on there often enough to go see,
Oh,
but
you can
I had done that before.
bank.
Anyways, the same thing. Little quiz told me all about USDC, and I got a free one, man. So I thought that was pretty interesting that they're up in their game on the old Robinhood as well.
Yeah, I think you can get like $30 or $40 on Coinbase, but with some of them you have to actually use the protocol, and it gets hairy whether you're actually making money or not. But yeah, I did some of them for like $3 and $5 where you just have to take a quiz at the end, and you get paid. You get paid coins, then you swap them into ETH, and watch the magic happen. And of course, the dollar is a guaranteed loss because of inflation. So if you're getting 5% APY on your $1 million, and you're like, woohoo, I'm getting
Woohoo!
50K a year. Yeah, right.
50K.
You're actually losing because your $1 million of purchasing power is being eroded to nothing as groceries and healthcare and everything else goes up 15 to 20% a year. You're in a sucker trade. But holding Hex, you could get paid 8% yield in Hex, and then Hex with its extreme volatility could go up 1,000x. It could go down 99%, but that's the risk reward that you're taking there. It can't go down more than 100%, right? The stuff on the stock market can go down 100%. Stuff in crypto can go down 100%. I've seen both of those happen. To
Have you ever
me,
seen anything go down 200%?
no, I sure haven't.
I
And
haven't either.
so the difference here is that in crypto, it can go up 10,000x, and in stocks, it can't go up 10,000x in any reasonable lifetime. So there you go. That's the trade-off there.
Very good.
ETH fees need to come down. I couldn't agree more. I had to pay $30. I had to pay $10 to approve the bridge to spend, and then I had to pay $30 to bridge money into Pulse Chain yesterday. That's $40 total.
Yeah, I'm disappointed. I'm disappointed there's a small glitch. Maybe it's a big glitch. I don't know, on Coast, where they're trying to resolve some regulatory issues with their provider. So I don't have the details. You mentioned it, so you might have all the details, but I'm confident and hopeful that it'll be resolved over time. I'm confident in the team, the Coast team, but I had set up my Coast to be able to utilize that for an on and off board, and I really did like it. I tested both directions. And that's 0x Coast, of course, as you pointed out.
Is it a
And
good deal?
I thought it was a good deal. I mean, it was a reasonable deal. It's a different deal. I didn't have to pay $40 to send something when I did it, but I had to pay a fee instead. So I guess teach their own, have to evaluate, the value and all the rest. Um, It was just a different process, right? So you go to, utilizing the Coast, you would get the Coast token, and you burn the token, and it gives you USD, and you transfer it to your bank. I did it ACH, work fine. But if I'm going, of course, people know this if they left Pulse Chain. If I'm leaving Pulse Chain with value, I've got to bridge it. And woe to you if you forget to bridge and you send it to the address on the Ethereum chain that you expected to send it to. Woe be you. Right? Because you got to remember more steps. You got to remember to bridge. You got to, if you want to swap it, you might want to swap it on Pulse Chain first. You got to make sure you got ETH on the other end. You got to send it to wherever your destination is. And, you got to wait that time frame as well. It could be a little faster, maybe a little cheaper, depending on what's happening on Ethereum. But yeah. Anyways, fun times in crypto.
I mean,
DeFi.
yeah, if somebody's bringing in like $20 or $50 or something, then, paying a fee is fine. But for me, I never really recommended Coast that much, even though I recognize the need for something like it, because if you're bringing in $1,000 or more, it's going to be cheaper to use Coinbase, because you're going to be sophisticated enough. If you're getting into Pulse Chain, you're going to be sophisticated enough to buy USDC at 0 fee with your bank account.
0.0 fee.
Correct. With Coinbase, I can cash in and out of USDC for 0. So if I'm doing a swap on Ethereum and it's costing me $50, if I'm bridging and that's costing me $50, on the high end for right now, maybe it's less at many times, but if we're going in, this is forward looking, then if I'm paying a 5% fee to Coast or something like that, then doing less than $2,000, Coast is cheaper. Doing more than $2,000, ETH is, ETH and Coinbase are cheaper. So
yeah, but on the Coast stuff, you can lock in lower fees at 1% or whatever. But based on the amount.
But
of
look at
weight
the
you can lock up.
value of their stablecoin. It's all over the place. I looked at the chart today on Dex Screener. It's all over the place. Sometimes it's worth 87 cents. Sometimes it's worth 97 cents. Sometimes it's worth $1.01. So like you're paying, that's an extra fee, that's slippage that you're eating on holding their stablecoin. And so it's like, am I paying an extra 5% because the stablecoin isn't holding? Plus I'm paying, a fee, plus there's an outage and that kind of thing. So, so I really think like, I would love to see Coast have little to no fee. I would love to see them, holding a dollar peg, that sort of thing. And, it's a really tough business to be in crypto, and just because we like people doesn't mean that they've got all the banking relationships figured out, right? They started off with Prime Trust that went out of business, and now they're having a second outage. So the proof of concept isn't there for me yet, and I hope that other people can help make it happen.
Yeah, this might be cutting edge, bleeding edge for sure. It's not an easy thing to get, apparently, from what I understand, not an easy thing to build a on-off ramp. And so, yeah, it's definitely a challenge.
It's really valuable if they do it and they get it right. Really valuable.
How many others do you know that are up and operating?
It's only Coast.
So that gives you some idea of the difficulty.
And they gave us an airdrop too. Don't forget.
Yeah, free airdrop. Well,
cool.
On both chains. Yeah, so I'm behind them in their corner. I mean, I don't have any relation to the project. I can't vouch for code and all that stuff. But what I mean is, I know that they are good community members from judging on the actions I've seen them take. And so I'm very hopeful, and I'm excited to see it kind of progress. Because God, you get, hopefully be before we get too much further into the bull, but to have a really robust system like that up and running that's separate from all these other hoops I got to go through, I like that. I like that a lot.
Somebody's asking which hex is better to hold, E-Hex or P-Hex. Do you have an opinion on this, Crispy? You can't say
Of
both.
course, both.
No.
I can't
Somebody
say both.
tried that and it
No.
was unacceptable.
Yeah, I don't know. It's not financial advice. I do prefer E-Hex. Um,
I'm really glad you said that.
and why? For the same, so it's because I do mining. Now, I'm maintaining on both, guys, so I'm not shifting from one to the other. But I like the E-Hex because I think that in terms of E-Hex, I get twice as much for the same dollar value, twice as many coins. Doing mining, so I get an increased amount of T-shares because I have more coins. I'm getting a higher reward rate, getting more calm. I mean, it just goes on, the type of things that I think that are beneficial. So yeah, that's why I lean towards E-Hex. But that doesn't mean only, right? So I'm still playing four,
I'm
my
glad
four
you
main.
said that because I completely disagree.
Maddie, tell me why you disagree.
Well, I tried to get on the E-Hex train and it was no good.
No good.
Well, I'm still staked for 12 and a half years on both chains. I'm not going to forget the one that brought me to the dance. That's for sure. But in terms of like, where am I putting new capital to work? It's more on P-Deci than E-Deci. Because on E-Deci, I'm pissed off at BankX putting a cap on the price of Hex for a while on that chain. And but people who like to make bets, they're enjoying the lower price of E-Hex. They see it as the same thing. It's the same contract code. It's got the same community. For me, I lost a shitload of money betting on Hex on other chains. I lost a lot of money trying to play the Ethereum fair Hex game that was very unfair, and whatever the other version of Hex was that was proof of work. So
Mm. But
I got wrecked on that,
that's not
and now,
E-Hex. That's not E-Hex's fault.
well, but people who make the argument that cheaper Hex is better, they can sure as heck pump my Ethereum fair Hex bags, except I lost them on one of the two proof of work chains because the proof of work people disabled the Hex contract on there. And so all my staked Hex can't be unstaked. Yay. So that pisses me off, obviously, and makes me gravitate a little bit more towards the most expensive Hex. And sure, I still love E-Hex. I'll be here for E-Hex for many years to come. But until somebody takes away like this V3 liquidity bullshit that's holding down the price of E-Hex, I'm not going to be as bullish on it myself.
Well, I'm glad you said that, Maddie, because I disagree with you.
Yeah,
I
do it.
disagree with you. I lean towards positive on the BankX stuff.
Do tell.
Neutral to positive, because man, what a gift! What a gift, right? So of course I believe in Hex. I believe in E-Hex. I believe E-Hex is going to be here for a while, forever, as long as the chain exists, and it's got great opportunity for us, for the community. If you were a whale and you wanted to get into E-Hex, could you do it before they did that? No,
No.
no, no new whales.
No.
Could a new whale be created right now at a reasonable price without slipping the market? Yes. Now the question is do we got somebody out there a whale or some big sharks are going to come in and take advantage of this range of pricing that's on V3 and join the community? Maybe. Or is the community going to have to eat that up? And different outcomes for that. On the one hand, if it's the whale or shark, great for adoption in a lot of different ways. If it's the rest of us, continuing to pick away at that amount, it'll take some time and keep the price low. But what an opportunity to get it at a lower price. So I think that I agree with Axis and RG talked about this. RG3 talked about this tonight. The dollar value is not, it's not insignificant, but it's not insurmountable. It's not out of the question that if somebody really wanted to come in, they could just buy it off the market through the V3 and move on. So
I mean, how many t-shirts do you get for 600 million hex? What, it's 30K, so it's what,
you want me to do the math?
20,000?
I did the math. I did the math for you.
200,000?
I'll tell you, it's a lot. So so we're saying how much hex do they have out there? 600 million right now? Is that what you said?
Yeah.
We give you a rough off.
It's 20,000 t-shirts. That doesn't make you a whale.
Well, maybe a shark. I don't know. Is it 20,000? Not 20,000. What are you talking
20,000 t-shirts?
Times 3. Well, I guess I wouldn't go quadricincle with it.
They could. You're more than welcome to.
I think about that all the time. So yeah, maybe somewhere between.
But 60,000 is 60,000 t-shirts a whale? No.
No, we'd have to
You have to have,
because
you have
we're
to
at
have
9.
90,000.
We're at 9.8.
Yeah.
Right. Yeah.
I got the
so
whale maths locked
Hey.
down.
You got this. You got this under control. Yeah. Okay. I misspoke. But you definitely get a big position that you couldn't have gotten regardless. Before.
I see what you're doing. You're trying to get me into E-Hex again, and it's working.
No, man. No, you choose. You make your own financial decisions. Not me. Not me.
Wow.
Not me. A shark is 1%. So 10% is a whale. Is that?
Yes.
Or what a whale is considered to be? No, Poseidon's 10%.
No. A whale's 1%.
A whale is just 1%.
So a dolphin's like 900 or 1,000 t-shares, and then a shark is 10,000.
Yeah, so something close to 100,000 t-shirts.
A whale is 100K, yeah. And a Poseidon is 1 million. We have a couple Poseidons who are rumored to watch the show from time to time.
Oh, good. I better clean up my act.
I don't think we ever will.
No.
But that's fascinating that even with all this supposed hex on the market, it's still.
Yeah, it's so hard, right? I mean, thank you for correcting me, because I was thinking it would be enough, but it's not even enough to be a whale. So
that t-shirt rate going up, it's a game changer, isn't it?
It goes up, yeah, 25% a year in those terms. But nevertheless, if somebody wanted to be a shark, they couldn't be a shark. So perhaps there's a gnarly shark out there that wants to come in and pick it up.
Well, and somebody who wanted to level up from being, a shark to a whale, this is your chance.
Mm-hmm. And Axis is saying, hey, there's more. I'm not reading it off the thing, but there's more liquidity out there. And if more liquidity came in, that someone could get a shark position, maybe, or maybe even a whale position. So yeah, be interesting.
Only 20 million to be a whale? Wow, that is a gift, isn't it?
Well, wow. I don't have 20 million in my checking account, but people who do.
But literally anybody who bought one share of Nvidia in the last 20 years is up like $20 million. So
I don't know about that.
Show up, guys and gals.
I sold my Nvidia going to Hex.
No, you didn't.
I had Nvidia, yeah, but not to go into Hex per se.
It's only it's like God's gift to creation, but it's only up like 70x or something stupid. Weak gains.
Weak sauce, man. I don't know.
That's right.
These slackers. What would have been the move with Nvidia buy and hold? What do you think?
Nvidia, I don't know, man. It's you know, you could have gotten into it when there was the whole, they were making ASIC cards, weren't they, or
Yeah.
something?
Yeah, this year, I guess I don't even know. I'm looking at maybe I don't know what chart. This year it's only up 74%, right?
Yeah, but look at the market cap. It's like $1
What
trillion.
the we know market cap doesn't matter. What is that? What are you talking about?
I mean, when you have circuit breakers on the stock exchange that like stop you every 10%,
Yeah.
yeah,
Okay.
nothing's real. It's not a free market, and uh, market cap does matter.
Hmm. I guess it does matter sometimes. I don't know. I don't know.
But yeah, I mean, another thing that a whale could do is stake medium term for 6 months and roll the yield into longer stakes, the so-called lock and roll strategy.
Lock and roll. Lock and roll. Yeah, you know what I'm doing? Somebody I know did like a very big Quattro Cinco, and I'm been watching my com bonuses, and so I'm planning to do a Quattro Cinco here shortly. That will give me a instant 20% back in com. I get 20% back in value comp. So if I put 10 grand out there, I get $2,000 value worth of comp back immediately. How about them? How about them apples? Do you like them apples?
I like free money.
I like free money. I like money. Mm.
I just, there was a part in like the mega thesis of com that I still didn't fully understand, where
Oh,
like,
that's understandable. Go ahead.
yeah, I mean,
Yeah. This is
I don't
complicated.
I
It's
don't
complicated.
assume to have the mega brain that's required, but
And
so
mine caught on fire. So go ahead. I'm listening.
people people are going to like, there was something in there about people are going to do the right thing and not just sell the com and then extract the money out of the system. But I didn't know why that would be.
Mm. Well, I think it's the same as any other assumption like that, right? It'd be like assuming people aren't going to sell hex. You know, they're going to mine it. Of course they are, right? I mean, that's what people are going to do, what they're going to do. But it does make a difference, and I think Access talks about this on some of this stuff. We've talked about it on some of my interviews, or my interview
Axis
with
should hop on, by
Johnny.
the way. I'm gonna send him the link in case he
You could do
feels
that.
like it.
If you bring
But
him on,
sorry,
I'm
go
leaving.
on.
I'm leaving though if he comes on. So.
No.
Hey, but seriously though, right? There, it depends on how the token is distributed. Yeah. So of course, if people sell it down, the price will come down. But right at the moment, I can still go do a miner at Quattro Cinco, get 20% back. And then if the price goes up, and the ratio goes up well enough against hex, then perhaps there's some leveling point. I don't know. Theoretically, go all the way to 100%. It go to 200%. Theoretically, right? Comp could be worth 200%
That
to
was
keep
the
on running.
part. That was the part that that didn't make sense to me, was if it got close to 100%, how people wouldn't just extract from the system.
Yeah. Yeah.
Um,
Well, of course, they will. It'd always be
but
transient.
yeah, but
It
it's
always be
interesting that
transient.
it's only issued to people who stake hex anyway. And if people are time locking for
Mhm.
so long, maybe they wouldn't. I mean, we had every reason before Bitcoin was invented to believe that people would lie about double spends, but it turns out if you have the right incentives, it just happens to work out that
Yeah.
that people stop double spends if they have something at stake, like a power bill in Bitcoin or in Hex. Maybe it's a Quattro Cinco.
Mhm. Yeah. Well, I think that, yeah, I've taken one side of it a lot of times, this conversation about calm. And I'm like, hey, they're free tokens, take them. Guys, do what you want with them, right? But there is, for those of us already in the community, that may not be the right approach because it's an automated marketing tool, right? It automatically markets Hex. I mean, if you can get 10% or 20% back, it's less painful to go out Quattro Cinco.
Hey, we
What
got
up,
a
stars?
gang. We officially have moved beyond a duo.
ChrispyMan, quit blushing.
I'm dropping them. I'm out. That's it. I'm out. Hey, I'll be right back though. I gotta go take care
Okay.
of the dog.
What's up, Axis? Great
Yo,
to see you here. Thanks for joining.
yo, you guys got talking about the calm thing. What's going on with the calm?
I mean, it's got value on Ethereum and Pulse Chain. The Pulse Chain side is worth more, but I mean, you got value on both sides now.
Yeah, that's kind of funny that if somebody bootstrapped the ETH side, that might help with gas fees.
How so?
Well, if you're gonna stake it till you make it, get some calm value back, then there's your gas fees. If the calm price is high enough, right?
Oh yeah, that's a great point.
You know, so I mean that's cool thought, you know. And but the thing is, like as Johnny Sachs says, is the ETH side calm hasn't been absorbed the same way. Like on the Pulse chain, it was so undervalued. A couple whales were able to accumulate like half the supply over there, and in the ETH side that hasn't been done yet. So there's a little bit more overhead, and the price over there is like only half price of a PCOM. So it's going to be a daunting task to get that rebate up on that side, I think. But I'm not saying it's not an opportunity. Seems like there's a ton of opportunities right now in Hex, whether that's through the COM thing or through the Bank Excel wall or just different strategies. You know, I think a lot of people when they think about Hex, they think emotionally about it, like because of the price, and they're not seeing the opportunity, which is understandable. If you bought Hex anywhere above 5 cents, you're not happy about that. No one should be. But there's still the opportunity there if you're willing to double down, which that's the thing is like a lot of people might not be willing to double down. You just gonna have to play the waiting game. It would be very, very hard to have DCA'd down from 50 cents all the way down to these levels and still be waiting and to keep putting money in. I empathize with those people because they're just basically waiting. And so hopefully they took a staking approach. And if they didn't, it might be time to think about different strategies. Some of the ones I like are staking your P-Hex for 15 years and then getting the COM back and then waiting for that COM value to grow in the coupon rate to the point where you could get 50, 60, 70% of the dollar value from your Hex stake back.
Whoa, front running.
Yeah, like if you just
Smart.
wait. You know, that's the thing is like people that are coming in from the outside or that aren't savvy on the Hex COM fusion, they're going to think, all right, I'm locking up 10 grand of Hex for 15 years and I'm getting back 2 grand and I have to sell it so I have my 2 grand back. But if you just hang in there and hold on to the COM, like who's saying that won't be worth $20,000 if Hex and COM start going up together, right? So, yeah, there's just an infinite number of ways to play that one strategy, but you know, it doesn't end there. There's like, you know, icosahedron V2 coming, which we don't know what all goes into that yet. And like you were saying, Deci's on discount, I think, on both chains, right? So there's opportunity there to capture T-shares that are 2 and 3 years old now. And
discount to the net asset value at least.
And obviously there's the lock and roll strategy where you can basically set yourself up with a forever 15-year ladder. So as you get past 10 years, you have like 10-year plus stakes coming off every year perpetually forever with that money that was free to you. And, you know, it's going to be hard to be a Hexakin in 2035 and watch all your buddies have 15-year stakes coming off and you're just on like year 6 or whatever. Or like, you know what I mean? You're going to be like different classes of people that got in a lot earlier and thought were way more forward looking. And that's it.
So lock and roll is 6 months. You do 6 month stakes, take the yield every 6 months and launch it 5,555 days. Is that right?
I don't like staking short for more than 90 days. And the reason is because we're in a bull market and I want to have that optionality to use the money if I need to. So like a lot of people are going to be turned off by staking that don't want to put their principal too much out of hands reach in case we do get a nice pump. Maybe just think about staking anywhere from 30 to 90 days because the yield isn't really that much different. And so I've kind of adopted this new thought and it's really polarizing. So it's like, I'm not that interested personally in staking. Like I have a ladder set up that I started with, and that's maybe where people should start. But I've started to evaluate the marketplace and just see where we're at with things. And I'm starting to think that if you're not going out 10 years or more on all your stakes, then you should be doing 90 days or less. Because the what you can get in the middle just doesn't quite satisfy the requirements necessary to give away that opportunity cost of missing out on a 50x or 100x move in the bull run here in the short to midterm. But if you're going longer than 10 years, you're going to be 2 cycles out anyways. And then it's almost like there's like a peak risk is in the middle. Let me pull up a screen here so I can really visualize it for people. Alrighty, let's do this. So like if this is year 1, or let's say this is 30 days and this is 15 years, then the risk curve looks something like this. So that there's almost too much risk between 1 year and like 8 to 10 years. So because you're missing out on the bull. Let's say this is the bull market, and then a bear market, and then the next bull market, or whatever. You see my point is like, because this goes a little bit too far, but the point is like to optimize the bull market, the farther you go down the risk curve, the less opportunity you're giving away. Like if you're staking between 1 year and 8 years, you're taking in too many unknowns, and the yield isn't good enough to make up for the unknowns. Whereas like if you did like a 10-year stake, like let's say right here, 10 to 15 year, and you get to this point, it's less risk and this is even less risk because you can actually EES in the top of a bull run here, and you still have a lot of accrued value in terms of trying to capture the market cycles. So I'm really not that. I think you should either do lock and roll strategy, 30 to 90 days, or you should go 10 years plus. And there's really no room for anything in between in terms of staking, in my mind. And that's totally an opinion. That's not how you have to play it. But I just see it as if this bull market's going to be, something like this, and then we get out to like here. You're basically avoiding all of this unknown area between years 1 and years 8 or something like that. Because the yield out here is going to be like 400% APY, and the yield here is going to be 9% plus the opportunity cost of maybe 100x returns selling the top. So this makes sense. And then the 400% plus for a 10 plus year stake, which will probably be higher. It'll probably be closer to 600% because of what's going to happen over the next 10 years.
What's the X on that?
Well, that could be 1000x plus the 400%, 600% returns in crypto. So it could be like 40,000% or 40,000x. It could be crazy because you're compounding.
Facts.
Yeah, you're compounding. But here is the death zone. This is what you want to like get rid of all the unknowns. And so my thoughts are, keep in mind too, what plays into the strategy is that calm coupon rate bonus being additional fuel that you get back to now. And I haven't even talked about Hex 1 protocol yet. So what are your guys' thoughts on that?
I'm glad you said that, Axis, so I could point out that you're wrong.
Okay.
That's what Matty keeps
Let's
doing
go.
to me. He's like, hey, thanks. You
I
know,
thought it was good viewing, good entertainment.
No. I think the discussion this is kind of advanced topic for everybody, right? What's the best kind of stake to make? Quattro Cinco. That's the best stake to make.
Yep.
Always been, always will be.
I don't even take this tab down anymore. I just always keep it up.
I mean, it's just the right thing. Now there's going to be people call, wait a minute, you telling people to lock up Quattro Cinco. No, that's not what I'm saying. What I'm saying is the best performing stake will be a Quattro Cinco always, right?
That's the metric by which you should measure hex staking, right?
Yeah, and the in between that you're pointing out, in the in between section was definitely all about liquidity, having what you need when you need it. It's about liquidity, right? They call it in the CD world, they call that liquidity. Having your CDs come out in a ladder and available for you to access your money, right? Because people are using it as a financial instrument. And so the reason to do nearer term miners was to try to make sure you had liquidity when you needed liquidity, right? And so if you're telling me my liquidity, my availability has been replaced by calm, then that begins to make more sense to me that that's a possibility, right? That we could be moving with all of these. And I did watch you and RG3 earlier, so I did hear you guys talking about a lot of these protocols are all making the midterm to shorter mining obsolete.
Yep. I'm glad you said that, Crispy, because let's talk about Hex 1 protocol, which is not set in stone yet, but I wanted to bring it up. I don't know if you've looked into this at all.
I only at a high level. By the way, that's not my protocol. I'm not involved in that project. I know nothing about it. Just read the white paper.
Yeah, let's look at it and just theorize.
Maddie may only know about this right now. I don't know if you've seen it before.
Have you heard about this?
I've never heard of it.
Okay,
Never
so
heard of it.
there's 2 or 3 devs on it, working on it. This thing could never launch. It could fail. It could not work. But let's suspend all disbelief for a minute and just like theorize if what they're trying to accomplish works. What is it going to do for Hex?
It's a game theory for sure.
So
yeah, guys watching the show, don't go out and do anything. We're just looking at this.
Yeah. Don't dump anything into it or whatever. Don't get scammed on the fake Hex 1 that's going to launch later this evening.
Oh wait, that launched 6 seconds ago. Wow, Hex 1.
Okay, so what do these guys want to do fundamentally is they want to be able to allow you to lock up Hex through their protocol from 10 years to 15 years and then borrow stable coins from the dollar value of the stake that's been locked up. So it's like you could think of it like liquid loans where you lock up Pulse, you can borrow USDL stablecoin from the protocol, but then it puts your Pulse at risk for liquidation and redemptions and things. But with Hex 1, when you lock up Hex for 10 to 15 years, there is no risk of liquidation because you basically, in order to claim that matured stake once it matures, you just have to replace the Hex 1 stablecoin back that you borrowed. So let's do a theoretical here. Let's say you staked for 15 years today and it was $10,000 a Hex. You could borrow $10,000 of value. Let's say tomorrow that that Hex stake is now worth $5,000. Your stake isn't at risk at all. It's just acting like a treasury accruing yield for 15 years anyways. and you're not obligated to pay anything back until the stake matures. So let's say then you go a year into the future and now that stake is now worth $100,000. Well, you could continue to borrow another $90,000 off the value of that stake because that's what it's worth. Now you could see how this could sort of steamroll into people staking and burning away hundreds of millions or billions of hex to borrow stablecoins against their stake value as hex price rises over time and hex gets more scarce, making the value of hex go up over time. Cool.
Who would buy a token that's backed by a hex stake that you could just buy yourself and hold it yourself and not have this risk?
So the whole way that this protocol works is that the Hex 1 coin is pegged to $1. So
through what mechanism of redemptions? Because like in liquid loans, there's a redemption mechanism.
The dollar
where you
value
can get liquidated.
Yep, the dollar value of maturing stake. So let's say
but if it's equal, then you would have to have a discount. Otherwise, the market would just prefer to hold the true asset, not a derivative.
there's no derivative for the hex stake itself. You can only just borrow stablecoins.
Isn't that what
against
the
it.
Hex 1 token is?
No, that's
Like,
just a stablecoin.
Who's funding the money that you're getting out of the system?
Yeah, so it's literally like just like liquid loans. There's no how does liquid loans peg it, USDL to $1? Because
By
it's
redemptions.
by
Because you can
redemptions.
always redeem it through Pulse. So I can always take a USDL and redeem it for $1 worth of Pulse. And then somebody who has a 200% collateralized loan gets liquidated against their will, and they get pissed off because they were like,
redemptions just lower your debt. They don't necessarily liquidate you. So like as long as your collateral ratio is high enough, you're not actually getting liquidated. They're just paying off your debt by you losing Pulse.
Correct. But yeah, so you do lose your Pulse
Yes.
if you get redeemed against.
Yep.
Yeah.
Yep.
Which is what stabilizes it at $1. Also, the liquidity pool that is needed to maintain so you don't get too much slippage going into USDL also like helps to fix the problem.
So there's like this whole bootstrapping process that they want to pull off to basically get a portion of this Hex 1 stablecoin paired up with DAI to help restore balance and create some sort of a peg to $1.
So it's like a transferable. Okay.
So there's going to be a liquidity pool where Hex 1's tied to DAI, but that's not what keeps it pegged. What keeps it pegged is once stakes start maturing, the only way to claim the Hex is to put in the Hex 1 stablecoins. And if you don't have them at the point after the 14-day grace period, instead of that just getting burned away into zero, it goes into an auction. And somebody else who has the Hex 1 coin, stablecoin, can actually get their stake from the protocol. So what this does is it creates a loop of somebody, every time Hex 1 depegs, buying that Hex 1 up so that they're basically getting Hex at a discount. Because you're getting like a stable coin that's, cheaper and its whole collateral base is Hex stakes. So, just that's the basics of it. Now, how they want to start it is basically there's going to be a bootstrapping period. You could think of it like a sacrifice, but it's not. And this is why, is because you can put in these 4 tokens into the initial bootstrap phase, and then all these tokens are going to get swapped for P-Hex. And then that P-Hex is going to go into a vault, which is going to be the base stable unit. That's where the first Hex 1 collateral is going to come from, is that first round of Hex that gets staked for 10 to 15 years. That's going to be like the root or the core thing. So then 75% of that Hex 1 that gets created goes back to the people who sacrificed. And 25% of it goes into a Hex 1 DAI liquidity pool to stabilize that as a dollar unit. So that's how it gets bootstrapped and started up. So effectively, if you're putting value in, you're going to get 75% back in dollar value in Hex 1 stablecoin. But that acts as the seed for the very first Hex 1 vaults.
Interesting. I'm not sure that tokenomics make perfect sense to me, but we do have Sami watching right now, so I don't know if I can send him the link and he'll jump on. But
Oh, send him the link. I'd like to see him jump on with us.
yeah, that would be legendary.
So my recommendation would be, because I want this to work and because I want all of the Hex to get locked up for 15 years and for everyone to print stablecoins out of thin air to also come back in and pump our bags up more and then put that out for 15 years and borrow more stablecoins and buy more Hex and stake that and print more stable, and create this, because I want to see all the Hex get locked up for 15 years to make the Hex price go to $1,000. Go into their Telegram and hammer this thing down and call out every single flaw you can see.
Yeah.
Because this working is, it's very similar to COM in that you're able to stake away 10 to 15 years and get value back now. It's kind of a similar thing. COM is tokenizing the T-share, and this is creating stablecoin liquidity. But they're both locking up Hex long term.
I think 10 things that have been built on top of Hex, like you have like an 80% failure rate. What's really worked? You have COM that the God Whale has claimed. You have Hedron that the OA and the God Whale have claimed, that are all still around. And so like overall, the success rate of things that are copying Hex or built on top of Hex is like extremely bad. And so I do think that it should be vetted harshly.
100%.
And that sort of thing.
Because I had the same thoughts. It's like at first I was like you, Maddie, and I think it's good messaging for the community as well, which was, this thing's never going to work. They're going to break. It's going to break. They're going to make a flaw. There's going to be a loophole. It's going to be a scam. But because I came at it from that angle for so long, and then finally just recently I just thought about it randomly one day, and I went in there and started asking questions to try to start poking holes in it. I'm optimistic that at least in an idealistic sort of way, this could be pulled off successfully. Even if it's not complete yet, it definitely could work, as long as it becomes rock solid.
If it's like liquid loans, if it's tokenized and redeemable and there's a discount factor and there's risk that's balanced between the different like stability pool, and that's what you would need.
And we were talking, I was
very similar. Very similar.
Earlier today about Coast and how it doesn't hold its peg. Here's Coast. I mean, half the time it's on a daily candle close, it's at 96 cents. That doesn't sound like a very good stable coin. So I'm with you on that. But if Hex 1 coin does the same thing, you're basically getting Hex at a 4% or 5% discount effectively. So you could basically come in here and accumulate all these discounts over 10 years and then have all the USDL or all the Hex 1 stable coins at the end of the rope, and all the other guys spent all their money, and you could buy back everybody's Hex potentially. So it's interesting game
That'd be
theory.
interesting. That's very interesting game theory.
Yeah,
I agree.
And the other thing too, I was gonna say, this isn't a knock on any developers in our ecosystem, but I would argue that version 1, and by the way, remember, I was a huge Hedron and Icosa proponent, even when Maddie wasn't. And I actually have turned a little bit. I think that Hedron and Icosa V1 failed because the auction house is completely empty, and the guys that are staking aren't making anything. And it desperately needs to be revitalized. It's a dead protocol as far as I'm concerned right now. And so, but I'm excited for what V2 could do, because there could be any kind of loops that are not complete circuits. We'll get a chance to fix that with V2. And I really like the idea of both Hedrons on each chain basically being redeemable for equal value, and so that we're no longer looking at the dollar value anymore. We're looking at how many units of Hedron can I use to deploy to get Hex stakes that are on the auction house. I like that idea because it reinforces that hedron is hedron, and that wherever it's cheapest is where I want to buy it.
Totally. Great points.
So I see it as the Hex ecosystem is just coming out of its first cycle of protocols and stuff, and really the only one that stands tall right now in my mind is COM, where it just seems like it's almost bulletproof. It, you know, and I was thinking about didn't you say something earlier about COM not having like who's going to uphold the coupon rate? I think is what you said.
Yeah,
Yeah. Well,
if it goes over 100%, that's right.
Yeah. So when I heard this legendary stream, I was doing some caretaking responsibilities away from home, and so you know I could have been off in my analysis, but I heard the legendary ChrispyMan, Access Live, Johnny Sachs, and Kodiak all streaming together maybe a week or two ago, and everything made perfect sense, and then I lost understanding at the point where COM gets close to 100% coupon rate, and then like new people are still entering the system. To me, what would happen then is like people who believe in Hex would like, you know, be getting 10x the amount of Quattro Cinco stakes, even at a 90%, and they wouldn't be sharing with anybody, and they wouldn't be bringing new people into the system at all.
Yeah.
How do you see that playing out, or what happens
my thoughts
under those
on this
circumstances?
So that was a theoretical event. What would that would only have, like when we would go basically above 100%, which by the way is right roughly in this general range. Assuming COM went explosive and went all the way to 100% coupon rate, every time it got to 101%, somebody would arb it back down to get all the Hex back. And this is where you're correct. It's like every time it got up here, somebody would push it back down because you'd get a full 15-year stake for free, basically, right?
Yeah.
So somebody would take advantage. Like we have a whole smart group of guys. Somebody's going to take that opportunity, I think.
But you're also assuming that's the point where people would take the opportunity, right? So they
Yep.
could do it. They could do it lower as well.
Yep. Which is why I like to look at, well, and let me get to that point, but let's explain the extremes first. So, you know, the only thing that's going to take the COM coupon rate over 100% is for moments the amount of insane buying coming in just can't be slowed down, and it could last 2 hours, it could last 3 days. We're talking like hyperbolic, bullish beyond you could ever imagine, like more bullish than we were at 52-cent, 56-cent Hex last cycle. The most bullish scenario you can think of, where the guys that are buying the COM are literally just degens that are new to the chain, new to the ecosystem, just pumping millions and millions of dollars into it because it's going vertical. But I think under any other condition, it would get arbed back down in like instantaneously. But it would be,
Yes.
it's fun to theorize. Like is there a situation where the COM supply gets so scarce and the Hex supply gets so scarce that the 15-year stake start bonus is just enough to meet the 100% coupon rate? And this basically does like this.
And Johnny says, yes, he does. He says, yes, it's possible. He's got the math to back it up, he says, to show that things could become that scarce.
Yeah.
I'm referring to Johnny Sachs, Matty ALLin. He was on your show one time. Yeah.
So, well, twice, I think, in a row, wasn't he?
Yeah, I just wasn't here for both. Yeah.
And so, like you could see here, we've been to 15% coupon rate recently on the 18th, which that means that if you put in 10 grand, you're getting $1,500 back. And you know, I could see us trending somewhere into this range in here. I'd like to see us settle around 20 to 25%.
You know, dude, I know you just got done talking about sorry I interrupted you too, but you just got done talking about Icosa and Hedron. You know who's going to really make out with this is the Hedron guys that may potentially have a new protocol if it happens where they can do hex mining instances, because what a double hit, to do a hex mining instance, why would I do anything less than Quattrocinco? I know some people do, but it doesn't make much sense to me. And be able to collect your com potentially. Wow. Yeah, I'm a purist and all, but I do recognize how that could be like a supercharged situation.
Yeah. And like my brain is like probably way far out there on this stuff. And like I'm envisioning a situation where you could make like a hex 1 stake, claim the com, claim the hedron, still utilize the functions of Echo's hedron to borrow hedron against it, claim the stable coins. Basically, like putting a 15-year stake out there is like unlocking a treasure chest of like all this stuff coming back to you. Like I think that's like where Hex goes from here is you get so many rewards for behaving in the system that you just can't resist it anymore.
So what is the inflation of com like when people are ending their stakes versus just starting them?
A lot more. So there's like let's not say there's about 75% more com that comes off at the end, but that's not a concern for about 7 years before some of that starts to come off that in a meaningful way. So there's a lot of runway before the end stake bonuses start coming due, and we get a huge inflation of supply. That's assuming that these guys that have these massive end stake bonuses aren't emergency end staking 1 day before their stake ends or sooner, when they're going to lose that supply anyways.
Well, if you think the hex population is going to 3x in the next 7 years, then the problem might take care of itself too. I mean, it's a 3x inflation over 7 years isn't that bad per se, especially with what you're saying about if com does its job and makes hex super scarce and hex becomes super valuable, more people emergency end stake and lose their com, that could be a really good system.
Huge burn on the com supply, which keeps the price inflated and elevated, which means more hex is getting burnt. So it doubles down on reinforcing more burned hex ultimately. Because somebody else couldn't contain themselves basically. So it's like people's bad behavior is going to end up in a net positive for the system.
It seems like a win-win if people are emergency end staking because they can't believe how rich they are.
Yep. Isn't this crazy? Like that's where the system's going. Hey, I did want to point out that there's a hidden bullish divergence happening on Com Pulse right now. So that means that like on this like daily time frame, we made a higher low here. But on the RSI and the indicator, we made a low and we made a lower low. So this is like textbook hidden bullish divergence inside this chart. This is the 200-day moving average here, and this looks like it's on a nice 45-degree angle and inclining. So that's that for you. Com is gaining on Pulse.
Is the Com liquidity set up much like the Gophers liquidity, where it's like a secret sauce V3 ladder situation?
Yeah, but I don't want to go into that tonight. I think this would be a good starter point for people. There is another layer to the whole game that Johnny Sachs basically invented, I can just say it simply that there's 10 liquidity pools, and inside of each pool is a different ratio of hex versus com. And so like currently where the coupon rate is, or the rebate here around 10%, the 10% rebate pool has like a very small amount of com paired up against a very massive amount of hex, which means which means that the hex is going to that means that if somebody dumps com, they're dumping the com into tons of hex, so they can't move the ratio around very much because the hex is so overweighted, which what the way Johnny words it is, the bid side liquidity is so big compared to the sell side liquidity that
Yeah.
anybody dumping quadrillions of com just can't move the com price down as easily because he set these up and designed them specifically so that as the coupon rate falls, it gets harder to push the price down, and as the coupon rate rises, it gets easier to push the price around. So you could think of it like that.
I think that's really important.
Yeah. Yeah. And you could basically apply that secret weapon strategy to any coin you care about. But it works really well for the hex com fusion. So yeah, Johnny's just brilliant with that, and we will do a V2 another stream with Johnny here. Hopefully sometime when I get back from the Vegas meetup, we'll all be out there.
Vegas.
That would be so cool. There's a mechanism in elliptical curve cryptography that this reminds me of, this liquidity strategy. And I know we've lost half the audience, which is okay on this show. But the idea is you have like a trapdoor. It's a one-way function that helps to secure your private key and all that good kind of stuff. But with this liquidity being a one-way trapdoor up, in a sense, where dumping, you get tons of slippage, but buying, there's a difference between the slippage when you're buying and selling. I think with a V3 strategy like Johnny Sachs, and so
yeah, the math works out a little different. Yeah, I don't know how much deeper we want to go today, but yeah, definitely.
But there's in some sense more of a one-way function than a two-way function there. Yep. in my opinion, and it reminds me of the magic of what makes crypto work in the first place, even if it's just by analogy. So,
people are talking a lot about ink.
Stuff.
I'm gonna pull up the ink chart here. I just got to see. Oh, we're breaking out against Pulse here.
I think people are aware that I sold all my ink, and I'm gonna be like the guy that's crying.
I think the quote was, "I cheated."
That's right.
My ink.
Yes.
I had to look that up, by the way, to make sure that was not a racial insult, because I didn't know what that meant.
It's not.
But now I know.
It's not sexual.
Maddie, was this your cell candle right?
I did not have that much.
Maddie capitulated. I'm holding it to all-time highs.
Maddie, was this your cell candle way up here?
I wish. It's not.
Maddie disagreed with me. Told me my idea around ink was trash.
Well, I think I gave you a little bit of resistance on that, didn't I? A little bit. Hey, so back here, this is funny. Sorry. So back here.
Yeah, reset the crowd.
The day that we launched, I was like talking about ink to $1,000, and I felt really good up here. And then when we started to get down into like these levels, I started to wonder if we'd ever get to $10 a cycle. So it even behooves the best of us sometimes, the market psychology. I mean, this thing came down hard against Pulse. It came down 97.33%, which.
But that was all a put up job. Axis. This is what Maddie told me earlier. This would have never happened, dude, if it wasn't.
If it didn't go so high, yeah, it's a different baseline than the rest of the ecosystem because it started with zero supply.
Yeah, well, I hope the guy that did it is listening, but I know the guy that pumped it from here to here by himself, and and just knowing that kind of information, it's like one whale can really change everything.
They can change the world, man. One person can change the world.
Yeah, at least for 23 days.
Or 6 months.
Right?
Well, yeah, I did acquiesce, and I agree with Maddie that it was a launch phase, etc. But the way I view it is because the tight liquidity between Pulse and PulseX, and I get your opinion on it, I hope. Not that we haven't talked about it before, but because of the tight liquidity between the two, I just expect that ink will underperform.
Yeah, it's going to be rocket fuel in a bull market, and it's going to be dog doo-doo in a bear market.
Now Maddie's asked me what I was going to do with my farms, and I was like, well, I think my plan is to keep them.
Oh, dude, Hexagon Hill just said Lunar Crush is now supporting Pulse Chain. Do you guys want to take a look? Sorry, go ahead.
Boom. Breaking
No,
news.
it's okay. Let's go talk about Lunar Crush. I'll see you guys later.
Oh, he's not going to tell us what he's doing with his ink.
Well, I don't think you want to know.
I got no ink.
Oh, damn, here it is. Pulse Chain. Let's go. Corey Costa has clout, I guess. He told me on stream the other day that he was going to make this a reality, and here he is. He did it. He did it, man. Awesome.
That Corey Costa.
Corey the GOAT.
If only Sami could be that influential.
Shit. We're gonna hurt everybody tonight.
Sami. Hey, I'm going to try to goad him to come on stream with Maddie.
Oh.
Come on. Someday.
I'll leave. I'll leave. So you can come on.
He waited a year of not showing his face because he preordained it. So maybe he's doing that with
it's all part of the master plan.
It's part of the plan. Yeah.
I got a hat.
He's waiting for a special hat to come in before he comes on Game Theory Gang. Probably.
So
allegedly.
Why is this important, Axis? What's Lunar?
It's probably not the most important thing that could happen, but it does give us more visibility on other platforms. Lunar Crush is an analytics platform. They do all kinds of stuff. They used to just do crypto, but now they've branched off into other fields. But at least now we'll show up in the Lunar Crush analytics, and we'll be able to check in on what's like going on metrics, with social dominance. This is across.
Okay. Yeah, that's good stuff.
Like Social Blade type, stuff. Network popularity. Like obviously here, this to no surprise, 95.6% of the interactions is happening on X and not on YouTube, Reddit, or TikTok. But sentiment by network, it'd say here I think red is bad. No, I don't know why it's got that reverse from these colors here, but anyway, we got a 50% positive sentiment right now out of 1.6 million interactions.
Wow.
Hey, there's a familiar face. But yeah, like Maddie, whenever you're tweeting about Pulse or on the Pulse conference, it'll all show up in here. So that's your job, is to get number one influencer.
I don't want number one.
No, I meant with the Pulse Chain conference X account. Maybe then they'll give us back our stuff.
Oh, the plan is to get it back. I'm hoping soon, and I've gone through about 8 theses on why they could have pulled the Hex badges, and I'm more and more confident that I've figured out what it was, and it wasn't what I thought initially, and it's hopeful.
Cool. Yeah, it was probably just
Do you mean
wasn't intentional.
You mean to tell me there's no customer service people that you can talk to at that company?
I tried.
They fired them all.
They only responded when I messaged them about KDP's account. So, I mean,
go. Depending on how you paid you, is go reverse your charges.
Well, it's all, it kind of reset, and the good news, that's already in, is that the Hex badges renewed successfully for a second month. Cool. So we just had that happen yesterday.
Another reason why Hex is number one. I still got my badge.
The badges are still here in Hex. It's, as you can imagine, overcoming scammers and all the imposters that are out there. Being an imposter pays extremely well in cryptocurrency. And so what Twitter is facing here, being the central point for crypto information, is unprecedented. In the history of humanity, you've never had so much AI and billions of dollars being thrown at impersonating people. It's a big business. Call centers that, scam boomers and everybody, it's all increasing. The metrics are going up. And so, it's kind of a big deal for us to figure out what the issues are because they won't tell you, because they're trying to stop scammers and they can't tell if somebody's a spammer or not in crypto. So I literally had to go even to people who read the code of Twitter from the actual GitLab of Twitter to figure out why the algorithm is ranking, why the algorithm is like basically what it's identifying in terms of people being scammers versus not. And that had led to some clues as to why maybe the Pulse Chain badges had mistakenly gotten taken away and how we might get them back.
Smart man. Good. Sounds great. I love it. Let's get it. Let's
It's
get
important.
it done.
Yeah. Yes. Because
I
it
thought
doubles
that was my
the
main
views.
reason for getting the hex on my thing, because the thought of somebody else making money and tarnishing my name at the same time
Yes.
makes me vent. Like
Yes.
I do not like that at all. So like that was the main reason why I did the hex badge.
Yeah, yeah. It doubles your views, and more importantly, it stops imposters, and of which there are many, and we'll only see more as this industry of scamming continues to grow. So if we can stop that as a crypto community that's always on the cutting edge of everything, if we can stop that, how awesome are we? Definitely.
I appreciate it. Appreciate your efforts, Maddie. Hey, MFS had a fun little Axis Alive geared question here about Gophers versus Axis token, and the people are noticing the liquidity strategies that I've noticed that too. That 6 months after Axis token launched, now people are starting to figure out. It's not just now. I noticed about 2.5, 3 months ago was the first sign of it, and then now, in the last month or two, you're really starting to see people kind of grasp, what we did with that one early. The difference is that Axis still has ultra scarce market supply. And there's really only if you look in the chain, there's only 15 or so people that even have more than 5 coins. And so, if Gophers goes to 10K, there's still 8,000 coins out there that is in market, everyone's hands. And so I wouldn't trust that as much as I'd trust people that have been holding the most of the amount of the Axis coins for 5-6 months now and haven't dumped. Literally crypto comes down to buying and holding and not dumping. That's literally what makes it go up.
Say that again. Time in the market?
Timing in the market is good in bigger assets, but even that has its flaws. But really just buying and holding and procuring and protecting a market is more important than the best market makers. You'll never see their mark on the chart. You'll never see the downside mark on the chart. You'll see the upside mark. Yeah.
We just had a new feature come out today for Time Pays Me, and I haven't made an announcement about it yet or anything, but it is live on chain, and basically the mechanism here, it doesn't change the smart contract. All it does is it allows you to see if you know a vault address when the supply is coming out. And the reason why I'm excited about it, because just like you're saying, Axis coin is supported. Any coin that people have and they want to pay their future self and not rely on their own lettuce hands. Like for me, if I don't time lock stuff, I'm liable to sell on a 2x or a 10x or a 100x. That's just my experience in crypto has proven that. Mm-hmm. And so we don't have Gophers on there yet. I think we'll add that really soon. But if you want to prove to yourself that you're going to hold, and especially now that I'm kind of throwing down the gauntlet to any new coins that come along, we saw it with COM, where a majority or a huge chunk of the supply on Pulse Chain got locked in Time Pays Me. Well, now you can go on chain and you can see exactly how long it's locked, whether the free life has been used and that sort of stuff. And so it's really fascinating to see. This feature is going to be rolled out and automatically integrated with certain launch pads, where projects will get a higher score if they, instead of just saying, cool story, bro, you're going to lock up your founder supply. In this case, projects will get a higher score if they actually prove that they've locked up their founder supply and time pays me. And if you see there's a menu and you can go to inspect a vault without even creating one. I mean, creating one is fine too. And
Inspect a vault.
since this just came out today, you kind of need to know like what the
You got
vault
like
is.
a practice vault we could use?
I certainly do. Let me
See,
I've probably got it.
I think it would be cool to just, I don't know if you have this in here somewhere already, but basically just like a list of just vaults, like just look through people's vaults. Wouldn't that be kind of fun?
Totally. Yeah. And that's part of the stats that we're building out here.
Oh, cool.
So in the private chat here, I'll send you the com whale address that, this was just found on chain by going to the fee address for time pays me, like looking back and seeing, who paid the most com.
Let's see here. Why didn't that work? Control C.
Let me see. You have to be on Pulse chain rather than Ethereum or some other chain. And
why would it have me on? I thought I clicked on Pulse chain active.
if not, I can share my screen. I just dropped the link to this. Yeah, but it's going to be really interesting to see, like, as we go into this bull market, if new coins are launching, as somebody who's going into a new coin, you might ask, well, why didn't the founders lock up in Time Pays Me or a similar protocol to prove on chain that they're not going to dump? There are plenty of promises. And this wallet actually has so many time locks that it takes about 30 seconds to load, because there are like 100 or 200 blocks that have been created with a giant ladder of hard locks for PulseX, a giant ladder. Let's see. PulseX is like the biggest ladder. I mean, and these are not small amounts of coins, you might think. And Pulse, there's a Pulse ladder. Of course, you can do a drip or a hard lock in this system. But there's a giant ladder of Pulse, PulseX. I think that there's some ink, and then there's 4 major com stakes that are all like a quadrillion each or something. I can share my screen if it's not loading there, because literally this is like probably the most extreme example of using Time Pays Me that we've seen to date. But I mean,
so yeah, just as you're pulling that up, as a founder, so a tool like any kind of time locking tool has a ton of value. So even in Bitcoin, you can technically freeze Bitcoin mid-transaction, time lock it effectively. So it's like one of the most key functions of any blockchain, if you think about it. The ability to stop time.
Yeah. So here we can see, like, in the vault, this is the vault address that can be found on the public blockchain by looking in the address that owns it. And, you could find that by going to the fee address for Time Pays Me, or by just looking on the top holders. And then I can see that the recovery address has been set here. So that means that the person has set up the function to undo a hack by setting up a second seed phrase. So that's valuable to know if, a founder has, or a whale has gone to the trouble of, being able to undo a hack using their second seed phrase. And then also I can see that they have not used their extra life. You can only undo a hack once before you need to migrate your tokens to like a new vault. And so panic mode is inactive, which means that they still have their extra 1 life remaining. And so that's cool. And then I can see, like, we have the locked amount for Pulse, 1 million Pulse, none withdrawn to date because it's a hard lock, but it tells me when it was locked, July 16th. 2023, and this particular first one is coming out on September 1st, 2025. A million pulse locked until 2030 here. And then, I mean, I just start scrolling and it's like going on forever. There might be far more than 100 time locks here, but you've got just the list going forever. A 2033 for pulse, maybe monthly or something here. 2037 for pulse. And then we just keep going. Gets down to pulse X, a certain amount, a million locked here and there, just in this giant list. And then if we go down, I think much farther, we get to the ink, these giant ink stakes, or sorry, the time locks. And Axis, what does it mean to be a quad father? Because I think that's the coolest term I've ever heard.
Well, you know, I was laying in bed one night listening to RH Max and ChrispyMan talking about all sorts of things, but calm came up, and I wish I could remember who'd said it, but somebody in
Somebody
that
in the
chat.
chat, yeah.
Yeah, somebody in that chat said something along the lines of, because somebody said, I think RH Max called them the Godfathers, and then this guy in the chat was like, "No, it's the Quad Fathers." So what a
Yeah.
quad father is it's a guy that has a whale position in COM. So there's only like 108 or 110, maybe 112 now quads out there. Quad stands for 1 quadrillion, which is 1,000 trillions, and 1,000 trillions is a billion. 1,000 billions is a trillion, and 1,000 millions is a billion. So you got to think that's a lot of thousands on thousands on thousands. That's a 1,000 trillions is a quadrillion. To try to put that in perspective, Maddie, pull up that picture of $1 trillion. Remember, what was that website where you could see a visual map so that people could really understand how much a quadrillion really is? It really is amazing to think about how much that is. But I think at the lows on the COM price, like a quadrillion coins or a quad was like 25 to 30,000 bucks. Or that was just recently. That wasn't even the beginning. But recently it was as low as like 30, 35,000 bucks for a quad. Now, and then I saw it recently get up to like $88,000 for a quad. That's a whale position in COM. And in order to get a quad from a max length stake today, you'd have to stake 32 million hex, I believe. Let me go check and see if I can find that tweet, because I don't want the math to be wrong. I made a tweet. If you type in @AxisAlive and then type in, "Do you even quad, bro?" It'll pull up here, let me pull this up. Oh, you got it? Nice.
Do you even quad?
I'll share my screen here for a second. We'll come back to that one because that's really good for showing the power of
Chad says in the chat he was the one that coined quad fathers.
Chad, yeah, I think it was Chad actually. Nice, dude. Hey, what's your Twitter or your X handle? I want to follow you. Fucking thought leader out here.
Yeah.
So he said, "Do you even quad, bro?" So to put into perspective how hard it is to mint a quad, you'd have to stake 32 million hex for 15 years, which is about $500,000, which is about 4.1 billion pulse. That's a ton. It's a ton. So you'd have to stake it's not quite a shark position in hex, but it's getting up there. It's getting up there. Let's see, what's 32 million staked for 15 years get you?
32 million.
2,900. So it's a low dolphin. A low dolphin position in hex gets you a whale position in COM. But you're also making that commitment and locking up 32 million hex for 15 years. Or instead of putting the 500 grand out there, you could just buy a $40,000 position, which is what a lot of the quad fathers have been doing, and that's what they created. How they created this nice bullish price structures, because it's just getting absorbed. So probably good for you to probably pull up the trillions, because imagine a trillion, which Maddie will pull up here, and then imagine that you needed 1,000 of these bricks.
I
Nice. You
just
got
put his
the
Twitter in the
nice.
private chat too. So,
Nice.
okay, credit where credit is due. Yeah. So here's our guy. He's dreaming of being a quad father, but he needs to accumulate a lot more hex to get there. And
Calm to $1.
yeah,
1 billion X.
this is him next to $1 million. You know, definitely the $1 million is smaller than he is. If you're counting $100 bills, then what is that? 100 million. It's like a pallet in front of him, probably bigger than him now, but like not in one dimension. And then now $1 billion is like way bigger than he is in all directions. But $1 trillion, whoa, you can barely see him. It's like 1,000 times bigger than him in every direction.
So that trillion there, just fun fact, the crypto market cap is 2 trillion. So just double that, stack it on top of each other. And that's what crypto's worth today.
That's nothing.
And a quad is 1,000 of those stacked on top of each other. So basically like a skyscraper's worth of money. Amazing.
Wow. Calm to $1. That's right. And shout out to D-Based for the 5555 super chat. Swag unit.
D-based.
When is the next Hex or Pulse conference? Let's go. Absolutely. So we have we've had like the Pulse Chain meetup tour kind of getting like misattributed as a conference. But nonetheless, that's the big in-person event that's happening here next month. I'll be there. Axis will be there. Crispy, are you going?
You said next month. It's next week.
Next week.
Like 7 days, baby.
That's right.
Vegas. I'll be there.
Awesome. Yeah, so this is going to be an incredible event. I'm just happy I don't have to put it on, and I'll be there and be able to enjoy it. In terms of conferences, we have an online Pulse Chain conference happening here May 10th through 13th, online only. And then you got the Pulse Chain tour going all over the world in the second half of this year. You got me possibly putting on a giant conference in the second half of this year, but no details yet on that.
Yeah. For D-Base saying that people are sold out, but I'll be holding consultations at the Cigar Lounge. So.
Can people tag along?
Come on. Yeah, man.
Well, we'll be there.
Cool. Yeah, check with Wild SJ and all them to make sure that that's understood. But yeah, I'm really excited to see as many people as possible. Thank you for the super chat.
Well, we've nailed a lot of stuff. I probably have to hop off. It's
Sure
getting late.
Oh, we got another 2 hours. What are you doing?
We're in the last 3 minutes of our show. We do
Perfect.
exactly 2 hours and 20 minutes every.
But
every
you
week.
see how he made it all about him, though, Maddie. Like,
What?
It
No.
made it all about him. I gotta go. See you later.
Perfect timing.
I'm tired. I'm sorry.
Where can people find you guys? Other than Vegas next week.
Yeah, Vegas next week, and you can find. Hey, Crispy, you should tell people what you're up to.
I think I'm gonna tell people what I'm up to.
Yeah, for sure. We've been working hard over here to get some new updates to the Hexfire site, and so I'm excited to see that kind of come to light here, hopefully pretty soon. It's going to be cool.
Days away. All right, we'll start with that. Yeah, Maddie, so you know that I have the website, and I said I was working on it for a long time. And actually, we did work on it for a long time. And it's nearing completion. Website just being a new way to, how people want to see data and information, maybe in a little easier, softer format. So it's a very nice format, nice methodology. But behind the scenes, I'm loading up all however many hundred assets and reports and forms and all that stuff. So it'd be a little bit more straightforward for people to get to it and all that. So it'd be, I'm looking forward to it. It's going to really up the game in terms of data availability and functionality. But I'll stop there.
Epic.
That's all going to be part of the Hexfire.io site. Hexfire.io. And of course, you can find me here with Matty ALLin every Tuesday night at Hexfire.io or on the Twitter, formerly Twitter, at Hexfire.io.
Yep. Find me on Twitter at Axis Alive, youtube.com/Axis Alive. We just did a nice little stream with RG tonight. Go check that out. Although I think that I had more fun here just talking about all the technical stuff and talking about Hex 1 and COM and all like that really nerdy stuff. I tend to really love that. So I was happy to be able to come on here.
Them is fighting words, man.
No.
I'm glad.
No shade on RG. We had that was a really good conversation too. Actually, we talked. I even got him to go a little technical tonight, so that was fun.
You know what? You know the one comment that
Nice.
I heard on that I really back up is you made a point to let him know that he is appreciated, and I would concur with that and just say that as well. You know.
Oh yeah.
RG3, we appreciate all the stuff you've done.
Yeah, he has. Look, he made a movie. He's dealt with everyone's shit for a few years. He's paying for people to run around the country to try to pump your bags. So I mean, he's trying, you guys. So give the guy a break. SJ in the back and Kay helping out. That really is awesome too. So appreciate them as well.
Yeah.
And I got Candace working in the back for me and for Crispy as well. So we're backed up by a strong army of women, and we're here to pump everyone's bags. So we appreciate it. And come check me out on accessalive.com/services. I couldn't tell you how many cool people I've met through those programs and through my memberships, and just excited for the future that way. So make sure that they know that they're also appreciated. We talk about some serious alpha in there. So y'all rock.
I've got something new coming out in the next week. I think that should be super valuable to all the streamers out there. This is something that people probably won't necessarily see coming, but will appreciate, kind of like the Hex badges were, but different than that. So, yeah, really excited to make that happen in the next week, and really excited to see everybody in person. We'll do some streaming as usual with our weekly shows, Tuesday and Thursday, this week and next week, and many more weeks to come. So,
Nice.
huge thank you to ChrispyMan and Access Live for coming on tonight and sharing their alpha. And until next time, stick
All right, see you
wisely,
guys.
my friends. And I need to load the graphic for the end.
Stay crispy there, Matty.
If you're claiming COM, hexcommunity.com. Best place to go. All right. Until next time, stick wisely, my friends, and peace out.
This is where you talk, Axis, so everybody can hear you.
Goodbye.
Yeah.
Oh no, Mr. Bill.
200 people. Hit the like and subscribe button. Share this. Thank you. Peace.
Out.